And please welcome to the stage Hayden Hill, Hall of Fame producer, speaking about approaching diverse scenarios in the home.
The future is golden. Step into the moment.
All right, how you guys doing? Good. So today, my topics are basically to go through a brief presentation overview, whether you're running in-home, over the phone, over Zoom, whatever the case is. It's going to be this is my in-home that's worked. There's going to be a few small tweaks if you're doing it over Zoom or over the phone, but it's going to basically be the same flow from there. We're going to transition and basically go into a couple different sales scenarios you guys will face in terms of like age, income, financial, social security card, bank, that kind of stuff. So basically the first thing I'm going to start with is kind of the basis of my presentation, no matter what kind of presentation it is. So it can be mortgage protection, it can be life insurance, it can be final expense, doesn't matter what it is. Basically the basis of my presentation is when I get there to the house, so knock, knock, walk in, sit at the table, I'm gonna basically look to connect with the client briefly and just kind of warm up, make sure they are comfortable with me, they know I'm there to help them, they know that I'm genuine, and it's not just some salesperson, coming at them hot essentially. So basically I'm gonna warm up with them, and then from there what I'm gonna do is have the lead on my phone, whether it was a internet request, where they called in, whether they filled out a card, I'm gonna have the lead on my phone or on my iPad. And basically what I'm gonna say is, okay, great. Now, John and Mary, you fill out this card, or you called in for a reason for life insurance, funeral and final expense coverage, mortgage protection. Why did you fill this out, or why did you request information? And I'm just gonna be quiet and basically hear what they say. From there, when they tell me their why, that could be to make sure their kids are taken care of. That could be to make sure their house can be protected. That could be to make sure when they pass away, their spouse has enough income to keep going and stay alive. When I have that, I'm gonna basically kind of get into the full presentation. So from there, show them my license. If you're over the phone, I'm gonna tell my license number and basically say, hey, this is my Arizona State insurance license. You can look me up if you want. This is me, I have my badge. I show it to them so they verify it's me. And then we're basically gonna get into the insurance companies, why I'm there, and basically find a product and a company that they can qualify and would be best for them. So once I show them the license, I'm gonna pull up the financial inventory. So I have it pulled up here. And basically what I'm gonna do is go through who I am and what we'll be doing today. So the structure of the appointment. So here to help you guys. I'm not just a regular life insurance agent. What I actually am is a broker. So what that means is I work with 2025 A and A plus rated carriers, and they all specialize in XYZ, funeral and final expense, or it's mortgage protection, or it's life insurance. Basically, what we're gonna do today, John and Mary, is we're gonna go through a quick financial inventory and health inventory to make sure, one, you can qualify, two, it's gonna be affordable, and then three, put you in the best position possible. Just like you read when you fill out the card or you inquired online, there's gonna be no nurses, blood, urine, anything like that. We're just gonna go through medical questions. It's gonna tell us if you're approved or not, and then I'm gonna shop around with these carriers and basically find the best company and product for you. So I get that out of the way real quick. From there, at the very bottom of the sheet, when it says what we do and it has the mortgage protection, life insurance, and retirement planning, depending on what kind of appointment, I'm gonna basically go into that. So for example, if it's a mortgage protection appointment, what I'm gonna do is ask them, Jake, do you know the difference between mortgage protection and life insurance? I'm gonna go through mortgage protection, very similar to like life insurance. The only thing is life insurance typically only pays out when you die, whereas mortgage protection most of the time has living benefits. If you get disabled, anything like that, critically, chronically, terminally ill, it's gonna be able to help you out, not just when you die. If it's funeral and final expense, I'm gonna ask them, Jake, are you familiar with the 3 ways to pay for a funeral? Cash, which is the worst way, of course. You probably don't have 10, 15, 20 grand laying around. The second way is a prepaid burial. What that looks like is basically you're going down to your local funeral home, you're setting up a plan. Typically it's pretty affordable. There's a couple issues with, or it's not affordable, it's expensive. Couple issues with that is, one, if you move, you're kind of out of luck with that funeral home here in Phoenix. Two, if they go out of business, same thing, you're gonna be kind of out of luck and they're just gonna give you your money back you put into it. But the biggest thing is if you pass away tomorrow and you haven't paid into the full plan, well, it's not gonna pay out that 15, 20 grand that you're looking for to cover your funeral and final expenses. The third way is the reason why I'm here, and it's what you requested. It's that funeral and final expense insurance. And this is how it works. It's gonna pay out immediately if you qualify. Premiums are never gonna go up on you, and in most cases, if you pass away in an accident, it'll be more coverage. If you get sick terminally, it can also help you out and pay out more money right away. So I'm gonna go through that basically so they know what it is. If it's a typical internet life lead, instant, 1 through 3 month, whatever the case is, basically I'm not gonna go through that, it's just life insurance, they know why I'm there. So from there, I'm gonna flip that sheet over. I'm gonna go into financial questions, I'm gonna go through health questions, and then when I get to the bottom, that's really my tie-down questions to kind of figure out what's going on and basically how I'm gonna set up the close and kind of figure out which way I'm gonna go. So the questions on there, I'm gonna ask them if they have a mortgage. What do they have to offset the cost of the mortgage? Do you have any life insurance, 401k, IRAs? If it's funeral and final expense, same question. If you pass away tomorrow, John, what do you have that's coming in for Mary or vice versa to make sure that everything's taken care of, the house, the rent, the bills, the debt? Do you have any life insurance, funeral, final, or 401k, IRA, retirement accounts, anything like that? So basically, the purpose of that question, I'm looking to see if they have any life insurance, if they have any retirement accounts, because I'm gonna use that later on in my presentation. Now, if they do have life insurance, guys, every single time I make sure that they get and they show me or they tell me over the phone exactly what they have. 9 times out of 10, what they think they have, they don't have. Maybe it's a graded policy when they can get immediate coverage. Maybe it's way more expensive than what I can offer them. Maybe it's a decreasing policy. Or maybe that term policy they got 27 years ago that's coming up in 2 or 3 years, they thought it was a whole life, or they thought they were gonna have that thing forever at $20 a month. So I'm gonna make sure I go through that and I know exactly what they have. And then from there, I'm gonna basically say, okay, great, and the beneficiary for this is gonna be Mary, I assume, or John, or your kids, who's the beneficiary? Okay, great, and I'm gonna reference that beneficiary over and over again while I'm going through the presentation, basically to drive home the point of why we're doing this. So from there, depending on which kind of presentation, we're gonna go through the options. If it's funeral and final expense coverage, I'm gonna use my manager, my underwriting team, whatever the case is, to basically know what the best company and product it's gonna be. If it's funeral and final expense, I'm gonna show them 3 options. I call them bronze, silver, and gold. Bronze is gonna take care of the minimum, silver is gonna take care of the minimum, maybe leave a little bit left over, and then gold's gonna take care of everything, and maybe leave a couple $1,000s extra to your kids or your spouse. If it's mortgage protection, it's gonna be a couple different options that I'm gonna get into. So a couple different scenarios you guys are gonna go into. I'm gonna start with mortgage protection and then work down. The first one's gonna be young mortgage protection. So basically going to the home where you call in and that person is 20, 21, 22, 25, they're young. What are you gonna show them? To make it make sense, I'm gonna show them and I'm gonna lean towards a cashback policy. And the same thing for life insurance. Why do I wanna show them a cashback policy? Well, at 20, 21, 22, they may not see too much value in just a life insurance policy. They're not thinking about dying, obviously. And so what I wanna do is show them something that's gonna benefit them, also their family. So, Jake, if you get sick, it's gonna pay the whole thing out to you. You become critically, chronically, terminally ill. If nothing happens, which hopefully it doesn't, you're gonna get your money back. But guess what? If something does happen, it's gonna make sure your family's taken care of. So that's basically how I'm gonna go through and give the most value to young people. For middle age for mortgage protection, if their loan is high, I'm not gonna go show them a $1,200 a month policy because they're probably not gonna be able to afford that unless the situation's right and they're telling me and I kind of feel like they really do want that and they can afford that. So I'm gonna show them maybe instead of cash back to a 50 or a 55-year-old, I'm gonna show them decreasing like a Marital Payment Protector, maybe a level term and kind of go off those 2 options, which one they wanna do. And then for older people, I used to always be so scared of older people with mortgage protection, and I think a lot of people do struggle with that. But basically what I figured out is if they're 75 or younger, obviously they can possibly qualify for some sort of term policy. The only thing is when you're 75 or 70, it's really expensive for like $100,000 or $200,000 or $300,000 or $400,000 term policy. So what I'm gonna do basically is ask them the question, Jake, if something happens tomorrow to you, do you think Mary's gonna wanna stay in the house or would she move? No matter what answer they give me, I'm gonna say perfect, I'm gonna keep it moving. But if they say, you know what, I think she would probably move. It's too big of a house. Condo, the kids don't live near, we're probably gonna sell it and move. Perfect. And basically what I'm gonna go into is something called equity protection. So perfect, Jake. Most people in your situation at 75, they don't really wanna cover the whole mortgage, and if I'm being honest with you, covering the whole mortgage is gonna be like a whole nother mortgage payment or more. So what most people do in your situation is they're gonna basically show you something called equity protection. It's my favorite product for seniors that are trying to protect their mortgage. Basically what it does is when something happens to you, and you said Mary would probably sell the house and move, what it's gonna make sure is that she can stay in the house and the mortgage is gonna be paid for 6 months, 9 months, or a year. That's usually what I show. Now, if you wanna do more, we can definitely look at that, but in the 6 month, 9 month, 12 month period, at least when something happens, they're gonna have time to figure out what's next. If they want to move, maybe they wanna refinance, maybe they wanna stay, but basically there's gonna be enough time after that initial shock that they're gonna be okay. So that's how I basically go about it with seniors. Next thing would be someone who's unhealthy, mortgage protection or life insurance. So they have cancer. They recently had cancer. They have a ton of stuff going on. Maybe we try a few options, they get declined. What I'm gonna pivot to and lean towards is accidental. So Samson with a 40-year-old guy, he has cancer, trying to protect his mortgage or trying to get a big life insurance policy. I'm gonna basically just tell him, hey Jake, you have cancer or whatever medical condition going on, you're not gonna qualify for any type of coverage. It's gonna pay out of natural death or like if you get sick, because obviously you already had that happen. So what most people do in your situation is to keep something affordable, but also be able to get that $200,000, $300,000, $400,000, $500,000 coverage. I'm gonna show you something that's an accidental death benefit, accidental mortgage protection. If they're under 50, even better, because if nothing happens, which knock on wood, you're 50, hopefully you do stay healthy for another 30 years or so, you're gonna get all the money back. So that's how I go about that one. Next one, just spoke with an agent. And so this could be in the home or over the phone, obviously. Basically, if I hear that, I'm just gonna kind of stay level with all this stuff, guys. When they give you objections or like it's a little bit of a weird situation maybe you're not used to, basically what I handle is to stay calm and level and basically just keep it moving. If you act like you're nervous or like you get like really high, like up and down, they're gonna think someone's weird and they're gonna think you don't really know what you're doing. And so, situation like that, I'm gonna skip the next one. Retired final expense. So they have money. So basically we're going through everything and they say to me, Hayden, I don't know if I need this because I have $200,000 in the bank or I have this amount of money in my retirement account. Hey, no problem. Jake, most people, that money they've saved for their whole life and they have in their IRA 401k savings account, that's for retirement. When you pass away, that's for Mary to keep on living and basically use for retirement to enjoy her life. With this, the funeral final expense coverage you requested, the best part about it is basically it's immediate coverage. So you have that for retirement. This $15,000, $20,000, $30,000 policy, what it's gonna do is when something happens to you, it's gonna take care of all the funeral final expense stuff for Mary, and then she's gonna have your retirement account, et cetera, to basically keep on living life, keep up with the house, keep up with the rent. So if they say they have money, just use that way and basically overcome that. Next thing, direct express. So I like to ask this question early on before I even start going through the options and going through the close. But basically I like to see, do you bank with a local bank or a credit union? The reason why I ask that question is if they say no, then I know, okay, Social Security card, Transamerica, Prosperity, AIG. The worst thing ever is when you're starting out and you're going through everything. They have no bank, they have a Social Security card, you got through all the prescription checks here at the end, and then you're like, what's your routing and account? And they say, oh, I have this card, and it's that green card. So I just make sure I kind of get that up front. If they do have that, Transamerica, AIG, Prosperity are gonna be the only ones that accept that. Next thing is gonna be lower income, or people on fixed incomes or fixed budgets. And so maybe they want a bunch of coverage, but they just can't afford it. The way I go about that is, hey, no problem, John and Mary. A lot of people in your situation, what they do is they'll put something in place that's just a basic program. So I know you want the $30,000. What we're gonna do is we're gonna start with the $10,000 or $15,000 because it's affordable and you're gonna be able to maintain it. Later on, if you wanna upgrade to the $20,000, $25,000, $30,000, no problem. Give me a call. We'll see if you can qualify and get that at that point. But something's better than nothing. Even if you're going through everything and they're like, you know what, I don't know if I can do anything, like this is just too expensive. Even if it's like 30, 40, 50 bucks a month, hey, no problem, John and Mary. Something's better than nothing. Let's get you started on the basic program. We can always upgrade later if you want to. And then next one is basically gonna be the higher income people. So you're going through everything and they're basically just trying to make sense of the benefit. So what I stress is it's an immediate benefit. Hey, I totally understand you have all that money in your savings account, but with this, it's gonna pay out right away. So $200,000, $300,000, $400,000, $100,000 policy, something happens tomorrow, it's paying out that whole death benefit versus just the money you have in your savings account. So go for the immediate, and we don't know what's gonna happen. And also with that, if you're to become critically, chronically, terminally ill, it could also pay out some of that money or all of it up front, and that's a huge benefit that your savings or checking account or retirement just can't do for you. So hope you guys use those tips, and thank you.